Greetings, everyone, and welcome to Your Money Matters. I am your host and publisher of the Bauman Letter, Angela Giroux, and joining me, of course, are Ted Bauman and Clint Lee. Now, before we get started, I did want to do a shout out for our newsletter, the Bauman Letter. We will be recommending a new pick in the coming weeks. You're not going to want to miss that. But we are going to turn our attention to these rather rough markets of the last couple weeks. Now, it's been ugly, but we're starting to see the question, is everything starting to get a little oversold here? So, Clint, if they are, where are the biggest opportunities right now?
Yeah, sure. So, we just talk about if the markets are getting oversold, first of all. And I think you talk about the markets being ugly, and they have been. When you look at something like the S&P 500 index, it doesn't really look like there's much of anything going on at all. So here's a chart of the S&P 500 going back about 9 months or so. And once again, you can see we've come off the peak in price a little bit, but not by too much. But as you know, we've been seeing this huge rotation underneath the hood that I'll show some more on here in just a moment. But for the question of oversold, we are starting to see some of the technical indicators that I like to follow to gauge those levels. So we've got the stochastic in the first pane down there, that's starting to reach an oversold level. The MACD that everyone is like to talk about it's starting to reset right there at that zero line. Typically when you're in a bull market, the RSI tends to find support around that 50 level. So we've come down to all those levels, even though this pullback has been relatively shallow in the S&P. But once again, that kind of masks what's going on elsewhere in the market. So here's a chart with the same indicators of the Russell 2000. Now, the Russell 2000, this is small cap stocks. It's off by about 11% from its high. So it's technically in correction territory. But at the same time with the dip, we see those same technical measures getting oversold on the Russell. The one thing I would watch very closely right here, because I think this will kind of tip the next move in the market, is on the price chart of the Russell, where I have this arrow and this green trend line. Right now, price is kind of sandwiched between this trend line price support and the 50-day moving average, which is the black line. So I think directionally, if we see price be able to move back above the 50-day, that supports us moving higher from here versus if we roll over and break through that green trend line, that indicates more downside. But at this point, I would be wagering more on the upside argument than the downside argument, and that's for two reasons I'll cover really quickly. One is sentiment is starting to become bearish. Actually, it started to tilt back to a neutral range, but it had been moving more bearishly. And so here's a way to gauge that. This is the CNN Money's Fear and Greed Index. There's 7 different indicators that make this up. But we're kind of borderline between the fear and neutral territory, but at the very least, it's not euphoric, all across the place, bullish optimism that's out there. We're not seeing that. So we're starting to see the investor sentiment's contrarian. So it's getting better to support some upside. But then the big one I'm watching is market breadth is getting very oversold. So with this pullback in small caps, this chart right here shows the blue dotted line is the percent of stocks across the market that are trading above a 20-day moving average. And then you've got the orange line is the S&P 500 itself. And I took this back to June last year, and I just wanted to illustrate what the circles on here. When you get this indicator, it corresponds to the scale on the right. When you start to get around sort of that 30% and below, that tends to tell you that stocks are very oversold. And if you kind of look up to the orange line during those instances, you can see that's marked important bottoms for the S&P 500 when it's been pulling back. And so that's what we've been seeing here just this week, actually, is this indicator reaching very oversold levels. So that, coupled with the improvement in sentiment, I think supports a move higher right here.
Well, that is great news. I love to hear that. Now, Ted, I'm going to turn to you. Where might we find some of these opportunities?
Well, I think the first thing I would say is that, what Clint's talking about, it's all correct. But remember, that's based on, market sentiment and momentum. So I'm looking at fundamentals. I'm looking at what sectors have tailwinds, because they're the ones that I think are going to benefit the most. There might be some assets that still have sentiment behind them, but actually don't have the fundamentals. And right now, as I said last week on my video, I would steer away from those. I'd look for where there's real underlying strength. And the first one I'm going to show is in renewable energy. This is ETF TAN. And you can see it's way off its highs, which weren't that long ago, basically in January and February. But look at those momentum indicators at the bottom, the ones that Clint was talking about. MACD way down, RSI below 50, and then the stochastic also, way down. So that's one that clearly is in an oversold state, but it deserves to be bought back up, I think, because it is where we're going. I mean, there's no question about the fact that renewable energy is going to get a big push. So that's one there. The second one I want to show is actually cloud computing, because that's been a very popular sector. But again, it's very oversold right now relative to where it actually should be. I've been looking at a couple of stocks for companies that provide, corporate data management and analysis services. And, what you typically get in the aftermath of a recession or, like we've seen last year is companies tighten up. They try to improve productivity. So it's bullish for these kinds of companies, the ones that business to business. Again, MACD, RSI, and stochastic all oversold, so opportunities there. The last one is in biotech. We tend to avoid biotech because it's very hit or miss, but every once in a while, you do come across opportunities that are worth betting on. But again, this is one that is also extremely oversold relative to where it was just a little while ago. And with everybody's attention focused on the pandemic and the possibility of, the need to prepare for the next one, I predict that biotechs are going to bounce back. So there you got three sectors. And remember, whenever we show you an ETF, the easiest thing to do is to go look up that ETF, look at its holdings and see what you like out of there. Or you could just play the ETF. But I would say that all three of those are candidates because they have those fundamental tailwinds behind them.
You took the words right out of my mouth. Dig into those ETFs if you want a specific way to play it.
Yeah.
It's time to go. It's time to go shopping now.
I would say, yeah, I'd say. But like I said earlier, I think that the thing is, people got addicted last year to making really rapid gains on very speculative stocks. I don't think that's going to pay off this year. I think you have to go looking for markets that have the real fundamentals behind them. EVs are a case in point. I mean, a lot of EV companies came onto the market last year, and they've gotten crushed. I mean, particularly the ones that just went the SPAC route, the new listings. But there are signs of a turnaround. And what's interesting is that those turnarounds are actually coming with the share prices of major manufacturers, because the market's recognizing what I've been saying for 5 years, that ultimately what happens with EVs is that you have to compete with everybody else on the planet, not just other EV makers. And we're starting to see that happen. And I think we're going to see, relative to, say, the Teslas of the world, we're going to see a lot of good price action in major auto manufacturers as they make this transition. So that's another one I'll throw in there.
Yeah. With that being said, sorry, Clint, did you have something else to add?
Yeah, I was just going to throw out too, Ted's highlighting some great sectors to go bargain hunting in right now. One that we mentioned back in February was a ticker SLX, which is the steel producers ETF. And that's one that is breaking out with all these, cyclical and economic tailwinds. It's starting to pop over this key 50 level that has been so important for this ETF going back almost a decade now. So that's one that I think you can play on a breakout higher here as well.
Great. It's worth noting that this volatility this year doesn't look like it's going to go anywhere. And as you mentioned, Ted, it's not quite as easy as throwing a dart at a board as it once was, as it was last year. So it really is a perfect time for you folks watching to try the Bauman letter. There is a link above and one below. And again, you can check it all out completely risk-free, and we do invite you to do so. And like I mentioned earlier, we'll have a new recommendation coming out in the next couple weeks, and we'd love for you to join us. Until then, we'll see you next week. Thank you, Ted, and thank you, Clint.
Cheers. Bye-bye.